The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, today is another day in paradise, and they are talking about the vote that they had in Britain. Remember, you heard it here first. Heard it here, folks. First, folks. Oh God, staying up night is not my thing. I can't do it anymore. Anyway, we've had some wild stuff. Boys and girls, something big just happened about 30 minutes ago. I'm going to share it with you, whether you believe it or not. I don't know, but I'm going to share it with you. This is the long-term chart here on the, let's get this right here, Larry, and go slow so everybody can see it. This is the long-term chart on the British pound going back over the past several months. I would like for you to see that little thing at the bottom of the page there that says 1.618. That came in at 131.50. The low on the British pound about 30 minutes ago was 131.49. Now, I know a crazy man that bought the pound, bought the euro, sold the bonds, sold gold, and bought stocks when that happened. Now, why would anybody do that? Well, if someone did do it, they would probably say if it goes a tick below that, I'd certainly be wrong. Right now, all of them are started to work, but I don't know if that's going to continue or not. But we'll see how the crazy man ends up before too much later. We hit a 61% retracement here overnight in the gold. We did rally up to the 1340 level. That's going to be an interesting spot. Folks, we've had a lot of things happen in these markets, and they're not nearly as crazy as people are telling you they are in the news. I mean, I understand that the banks are going down really badly in the UK with the Royal Bank down, Royal Bank of Scotland down 40% in a week. Deutsche Bank pretty close to that, down was down 25%, I believe, on Friday. But you know, this is the same story that we've seen before. I posted the chart of the FTSE in there, and if you'll notice, the FTSE just made a 61% retracement and then rallied, 700 points on Friday, and it's sold off a little bit today, but it's not even close to the bottom that it made, after the Brexit vote. So there's something just not quite right on some of these things. One of my favorite books that I've mentioned here many times is a book by Bernard Baruch. It's his autobiography called My Own Story. He's a really fantastic book. It's really amazing. But he knew J.P. Morgan, James Keene, Bet a Million Gates, Diamond Jim Brady, Averell Harriman, James Fisk, J.D. Rockefeller, the Guggenheimers, Nicholas Tesla. And he lived during that time and was incredibly successful. His father was a very influential surgeon, and he got a job as a broker right out of school, and that's when he made his thing. But he made one bad thing. He used the word when he met J.P. Morgan Sr. the first time in the, I think, 1901. He had a meeting with Morgan because he had gone to Texas to look at the oil wells, and he felt that this was going to be a big industry, oil coming in. And he mentioned to Morgan that it would be a good gamble to try something in the oil market. And Morgan just unleashed a tirade about he doesn't gamble. He speculates. And he said that was the one word, gamble, prevented me from having a relationship with J.P. Morgan Sr., but he was later on very close to J.P. Morgan Jr., the one that became quite influential after his dad had passed away in 1913. Anyway, that's what we're looking at. Let's take a look at some of these markets just around the world. I want to quickly show you what's happening. This first one we're going to take a look at is the Hang Seng. If you'll know here, you'll see that it made a big ABCD pattern, has not collapsed at all. No sign of a major panic coming in, even though we've got this really heavy astrological stuff coming in. It's the same thing going on. Take a look here at what we have going on here in the German DAX from the last few days, which should be affected by the euro a great deal. You'll notice that after we had that bottom on the 24th, after the thing, we had a huge rally, and now we've come down and we're forming a Gartley now on a buy side, possibly here in this German DAX. So that's another one you want to keep an eye on that possibly should do that. Okay, Mr. Z, I will slow down. In fact, I will take a little nap now. I can't help it, folks. You don't get opportunities like this very often with this type of volatility. So you have to play with it while the cards are on the table, as they say. But tonight will not be an overnight night for me. That's for sure. I will not do that. So I will, anyway, we'll see what happens here. Okay, the other ones that we've looked at the New York Stock Exchange Index. It has not done very much to the downside. The Dow Jones Industrial Average certainly hasn't done very much. Remember, the S&P 500 has not even made a 382 retracement that came in at 1999. We didn't even take that low out yet. We got down to 200, I think, or 2,000 tonight, but that hasn't happened as of yet. Okay, now what I'm going to share with you now is what I think one of the more important things that I've tried to share over these years. And as a matter of fact, this will be known as Larry's swan song, because if this doesn't work, I should be in another business. So we'll see how it works. Folks, there's only a few times in the investment community where you don't have to risk a whole lot to make a lot. And I think we're approaching that time very, very carefully. One of the reasons why I pulled out Bernard Baruch's book over the weekend and read it again was to remind myself of what he said about a speculator. He said a speculator's job was to observe something that would happen before anybody else could see it happening. And I see something happening. I certainly might be wrong, but boy, it's got all the elements of the things that the Brexit is made out of. In other words, surprise. Everybody in the world is looking for the return of their money, at the return on their money. They want to know what's the best interest rate they can get, whether it's a utility index or whatever it happens to be. These are the things that they're looking at right now. Now, if we take a look here at this long-term chart here on the utilities, the weekly chart, you'll notice the top up there where that black line is, where it says top, that was the 1.618 expansion. We hit that number spot on Friday at 689. And so it closed a little bit below that, but that number has worked out pretty well, so we need to watch that. But this is one of the most important ones is this. This is I'm going to slow down here a little bit. Give me a break here, Larry. Hold on. I just like this stuff too much, folks. This just patterns. They don't know diddly squat about the fundamentals. I don't understand it. This is the German bond. As you can see, we made a 1.618 expansion, backed off for a week, and then we had the explosive run after the exit of Brexit. And we're going to come back after these few words from our sponsor.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to be talking a little bit here about the German Bund. I know most of you have never traded it. A lot of you probably never even heard of it, but it's the equivalent of the 30-year bond in Germany. And that is very, very heavily traded in Europe. As you'll notice here, this huge move that we had from 163 to 169 after the Brexit vote on the 24th, we had a monumental blow-off. Then the market, came down from 169 back to the 165 and change level. And since that time, over the past 36 hours of trading, it hasn't quite made a 382 retracement as of yet. The 30-year Treasury bond, on the other hand, has gone up and made a double top. We got up to that 173 level one more time in our Treasury bonds, and believe their bond is trading the same time that we are right now. So these prices are pretty much up to date. The reason why I bring this to your attention is twofold. First of all, if you listen to any of the news, to people will try to interpret what's going to happen next, which is always difficult when a situation like this occurs, and you get their opinions. And the one opinion that comes across to every single person on Bloomberg and CNBC is absolutely sure that interest rates are going to go lower, and now they're talking about the Federal Reserve dropping rates instead of raising rates. When you get everybody on one side of the market, that's not a good thing. You saw that in the British pound. I'm a technician. I look at the charts. I'm looking at the long-term charts. I'm going back 36 years. The market bottom for interest rates. Well, they actually topped for interest rates. They bottomed for bonds back in 1981. The stock market bottomed in 82. So we've been in this 35-year move of lower interest rates for a long time. Pretty soon, not in the too far distant future, this is all going to end. And what I'm trying to do is position myself as near to the spot that I can see something really dramatic happening as I can. And I see that happening right now. Now we have some very strong cycle things occurring this week. We will actually be looking at that's the 27th is the 28th is the start of it, which is tomorrow, and then we go all the way out into the 7th of July when there's a few other things going on, and that's the time frame where the Bradley model from July 7th through November is basically moving one way. Now, there's a possibility that the Bradley model will invert and we're going to be up from July into November. That's also a possibility, but we'll know that by the second week in July. The fact that these markets have not collapsed, I mean, they really have not, folks. If you just look at the charts, I mean, the people on the tube are telling you they've collapsed, but I look at, hey, I've been on the right side and I don't see them being collapsed. So this is not an easy thing for me to grasp when they're trying to to see what's going on. I will try to bring up that Bradley model at the break and let you folks take a look at it. Those of you that don't subscribe to the newsletter. We were able to buy the gold the other day. Last week we focused in the newsletter that the importance of that 1255. That was a beautiful ABCD pattern in the gold. It was the first major one we'd had since February, and it turned out to be a really good move. And we're exiting that today, and we'll see, what happens to the next thing. But very good support at 1285 now in the gold. That would be another ABCD. We're having such big swings intraday in these markets that you have to really, understand it. That's basically it. Okay, that's the main thing. I'm sorry I talked a little too fast, but I get a little excited and I want to tell you too much, and that's probably more than you need to know, certainly more than I need to know. But that's the bottom line of what I'm looking at. One of the things that's important is one of my very good friends of over 50 years is Larry Williams. Most of you know who he is. He's come out with a trade that he thinks has got one of the best potentials that he's seen in years, and that trade happens to be in the Treasury bonds, and also from the short side. If you're interested, you go to ireallytrade.com. That's Larry's website, and you can get that information. I think he sells the report for $35. It's dirt cheap. It's less than a cost of the old commissions on a 30-year Treasury bond. So when he puts something out, folks, he does a lot of research, and Larry is an expert in pattern recognition and also in cycles. And he's doing quite a bit of astro research now also, but keep in mind that he's looking at it also. So the patterns there, all the things that make it happy and gooey is what looks good. If we take a look at this long-term bond chart, this is just going back, the last 7 years. You can see that we have a butterfly pattern completing the ABCD pattern up here. So all of that tells us to see if that's right. The question is, if I'm wrong, what's going to happen is there's going to be probably some type of an outlier event, like Britain decides to close its doors. Nothing like that's going to happen. But maybe the British banks will fail. The guy today on CNBC said that there was an absolute impossibility that there would be a run on the British banks. Well, let me tell you something, folks. If they're down 40% in 1 week and 40% in another week and a 40% in another week, the bank run is over. The banks will close. So, watch what the stocks are doing. Deutsche Bank has dropped 40%. Royal Bank of Scotland has dropped 40%. This is what happened to us during 2008. Remember, they first took down Bear Stearns, then they took down Lehman Brothers, okay? And they left the tallest midget in the room, Goldman Sachs, stayed in business, as did J.P. Morgan and Morgan Stanley, and Wells Fargo, and Bank of America. So we'll see. Okay, that's what we're looking at right now. So we're seeing that we're going to be watching at some of these things and see what they're going to be looking at today. And we'll see what happens with the rest of these as we move up. Okay, anyway, we'll get an idea what's going to happen with these markets this morning, but we've had some pretty good support down here at the 2,000 level in the S&P, and we'll watch that very, very closely, and we'll see how that ends up. We've got the bonds are up quite a bit from the close on Friday, so that means that TBT is going to be lower still, but I still think that we are getting close to these things, so you've got to be, and I have been in and out of bonds twice tonight. They had a tremendous sell-off, well, a point, which for me, $1,000 is quite a bit, but that's, that they backed off to that 171 level and then went right up to the 1.618 expansion at the 173.10 level. So I'm still trading it in and out, but my positions that I'm in now, I'm basically flat gold, and I'm long the euro, and I'm long the pound, and I'm long a little bit of stocks from 2002. Okay, we'll take a break here. We'll come back and look at a few other of these things. I got a whole bunch of charts that you might be interested in.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back and we are talking here about the crude oil market. As you can see, if you'd like the ABCD pattern that we had in the gold at 1255, you're seeing the same thing occurring in the, what do you call it? In the crude oil market. You've got a beautiful ABCD pattern coming in. It's got all the earmarks that you need. You've got a beautiful 61% retracement up there at $51 a barrel. And we're very, very orderly on the way down, where you have a perfect ABCD, coming in at that level. So we'll see how that transpires. I noticed that I noticed that the TBT opened this morning exactly at the 1.618 expansion at $32. I was fortunate enough to get in it at $33 for the service, but I've got a pretty wide stop on this one because I believe that it's got a chance to be really a really good trade. But maybe interest rates will go down forever, but frankly, history doesn't say that that's going to happen, but we'll just have to wait and see. We've got a situation that is really very, very dangerous because you've got so many people, what I believe is on the wrong side of the market. And whenever that happens, you can see what happened with the Brexit vote, that something like that happened. And this is even bigger because this is interest rates. This is people's savings and stuff like that, folks. So I would really be careful, to see what's going on. And I'm basically positive to what's going on in the world. I believe that's going to be okay. But whether we get through this next period of the next couple of weeks is what's going to be interesting. The markets across the world are holding up incredibly well. I don't care where you look at them. They're all right. Even the Nikkei, which is the absolute disaster of a technical picture, that is the one that is really the most bearish of all, and yet it didn't even open lower last night. To realize that 60% of all that stuff that goes on is done by the Japanese government. There's very few, people in there speculating anymore because they've basically taken out all incentives with taxes and everything else to do anything. So this is just a disaster, finally waiting to happen because this thing's peaked at 39,000 and change back in 1989, and it's been in a 27-year bear market. So that's not a good thing. One other thing that happened interesting over the weekend is University of Arizona baseball team is in the World Series, and they had to come from behind in double elimination series to win all 6 games, which was almost an impossible task. And now they play this week for 3 days against another team from, I don't even know where they're from, but it's not a major college, but they're still there, and now they're playing for the College World Series. During this time in Tucson, we have a small poker tournament during the World Series for the baseball for the college. You buy in for $30, and it's a charity. So you give the money if you win, to charity, but you have a lot of fun and you get to visit some of your friends and stuff. But I'm at a table, and I have 2 people at the table giving the story about interest rates and why they're going to stay lower forever. And the best way to get returns on your interest rate is go down to the Bank of Tijuana, in Tijuana, Mexico, where they're yielding 12%, which is, and they figured it out, that was 6 times what they're giving here in the United States at the Tucson Federal Credit Union. And I can remember 1976, it was the same thing. They were giving him 20%, but what happened was one day the British or the Mexican peso opened at 10 times less because they devalued. Now remember, the Mexican peso is trading at almost 19 pesos to the dollar. So this is not a very good thing. And when you hear, the layman talking about this is what's really interesting. So just keep in mind that this is just my opinion, but I've been doing this a long time. And when I call Sister Mary Perpetua at the St. John Bosco Orphanage and tell her to take a few shekels out of the basket and put it into some short bond positions, I don't do that by any, not doing it lightly anyway. So the last time I talked to her was actually March the 5th of 2009, where I told her to buy some stock. So anyway, I don't know if that's going to happen or not, but we'll see. We're going to make this my swan song, though, because if this one loses, it's time for the old cowboy to hang it up. I'm getting tired. I love doing the trading, but the workload is getting a little too ominous for me sometimes when I start slurring my words and stuff like that. We've gone up almost 100 pips now in the British pound from the 1.618 expansion that we talked about at 131.49 this morning. It happened about a little over an hour ago. So that may or may not mean something. We've rallied about 40 pips in the euro. So that's holding okay. The one thing that I would recommend you folks look at is watch how the S&P handles the old low that we made here the other day at 1999. That was a 382. If we just go down there and take it out by just a little bit and it doesn't go crashing down from that level, that's probably a sign that we might be getting ready to bounce from this level. That would be my guess. But remember, we live in interesting times, as the Chinese curse says. So all bets could be off on all these things. So watch it, very, very closely. But we'll see if how the rest of these things pan out as we go through the rest of the day. We have a couple other charts here that I think that are pretty important, to look at from a long-term perspective. And one, of course, is this Japanese stock market chart that I wanted to bring to your attention, because it is a really good idea of what this market looks like. We had a bottom form, back in February. Then we had this very tiny ABCD pattern that stopped at the 382 retracement. Then we gapped down. It was amazing that it couldn't get below 15,000 today, but the Japanese government came in and started buying at the opening, and it ended up being up 200 points after being down 1,200 and some points on Friday. The $64 question on this Nikkei is, if this government has got 70% of the stock out there, who's doing the selling? That's what the question is. Because for every buyer, there's got to be a seller, and something's not right with this program. But the overall market has held up incredibly well. If you look at the New York Stock Exchange Index, I mean, this is just a flat-out normal correction coming off of a retracement level. That's all it really is so far. That doesn't mean it can't pick up, but we've only been down. In fact, we were barely down on the week. If it hadn't been for that Brexit thing, we would have been up on the week. So we're still, there's nothing wrong yet, but that doesn't mean it can't change. The currencies, given the fact that we've had such a move in the British pound, $10,000 move in a 24-hour period, folks, that's a huge outlier event, and that means a lot. So until we get that rectified, there's going to be some very interesting things occurring.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and US dollar denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're going to take a quick look here at this gold market. As you can see here, this is a 4-hour chart going back to the end of May. We made a beautiful ABCD pattern there. That was the one at 1255. I focused on that one in the newsletter last week because it was a perfect ABCD pattern. This week I'm focusing on, of course, the crude oil because we're seeing this same pattern in crude oil at around 45.70 in the August crude. So keep an eye on that. But if you'll notice, after we made this bottom, we had a $107 rally, our biggest rally, I think, in 5 years in gold. And we went up, made a 1.618 expansion of the high from last week at 1362. We then backed off. And we made a little 61% retracement at 1340 last night. That sets up a lot of support coming in around the 1297 to 1285 level in gold over the next few days. We're going to see some pretty good swings. I mean, we're seeing gold drop $50 off of its high, very, very quickly, and then hold and go sideways, which is certainly a very, positive aspect to it. But we'll see what's happening. Anything above 1370 tells us that the next stop in gold is around 1420, and there's nothing stopping it. Once it gets above these levels, you're going to see, some really, really serious things happening. Now, we are testing the low here now in the stocks. We're almost to that 1999 level. I did this last night because I was watching it from yesterday's, Friday's trading, how everything lined up, and all I need to do is to pull it up and we should be okay. Here it is. This is the E-mini from yesterday. This is just a 4-minute chart covering all of the stuff that happened yesterday, Friday, and then also Sunday. If you'll notice here, this is what's looking at it. We're into the 27th now, and as you can see, if we break below this 1999 level with a great deal of gusto, that sets up a ABCD pattern taking us down to the 1950 level, down 50 handles. That would mean that we would be looking at about a 500 point, about a 400 point drop in the Dow. We're down over 100 and some right now, so it wouldn't take much, for that to happen. But if this level holds, We've already broken the level, of course, in the Nasdaq, so we'll see, what's going to see what's going to happen, and then we'll look at that. But those are the things in the stock market that I think look rather important this morning. So far, we're down there testing it. And, what I look at is how the market reacts to it. If there's no selling down in there, that basically tells you that you've got a chance, for the market to hold that level. You have a good place to quantify your risk, and then you have a pretty good chance of, seeing where you are. So that's the main thing. Okay, let's talk about the grains a little bit, folks. We had some major support happen on Friday. Unfortunately, it was after the markets had already closed for me. I mean, I was already done for the day, and we'll notice what some of these things happening. But the one that looked really interesting was the wheat market. We had a very interesting. Well, all of these grains did the same thing, but you made a lower low than you did in March, and then you had a big reversal. The market rallied 14 cents in wheat, leaving a hammer candle. That's a very bullish chart. Silver I don't have, but silver needs to get above the $18.10 per ounce level in order to get it to break out. I think we're going to consolidate a little bit before that happens, but I still like silver. As you know, I think everybody should be buying silver for some type of a move during this time. Now, I wanted to show you one that is really interesting because this is a 60-minute chart on soybeans. And you'll see this same pattern that we talked about on Friday, and that is we made that perfect 61% retracement down there at the 10.75 a bushel. We've already hit $11 a bushel this morning, so this market has definitely turned from that level. So you have wheat and beans already making nice turns from really good patterns, and so you want to keep an eye on all of these. The last one we need to look at is the Christmas corn. This one was really amazing one because this is the largest crop that we have in the United States. And if you'll notice that we had the corn hit the exact 786 retracement at 384 a bushel. We're now trading close to $4 a bushel already. If you'll notice, that's the 135 pattern where you have the higher bottoms. And it sets up a pretty nice for a pretty good retracement because, for the week, corn dropped about $60, 60 cents per bushel, which is the equivalent of $3,000, which is a lot. I don't think that had anything to do with the Brexit. I believe it was the fact that the weather patterns had just, slowed down a bit and made it a little bit easier. So we have wheat, corn, and beans are in a buying mode here. So if you get a little bit of a pullback, you might want to keep an eye, on that particular thing because it's got a real chance, to be a pretty good winner if in fact if we do get to that level. Well, we still haven't taken out that low in the S&P yet, but we got really close. We got to 2050. 2050, the old low was, of course, 1999. That's when the market was limit down during the Brexit thing. And frankly, these markets are very orderly now after the first half hour of the Brexit vote. That's when things got crazy, folks. I mean, in that first hour, you were seeing spreads of 60 pips in the euro and 100 pips in the British pound. Those are just totally unheard of. So these are some of the things that you kind of keep an eye on when you're trading some of these things. But they're holding up relatively well. The Dow's down, 130 or 40 or so. So it's, there we go. We finally took out that low. I think we just did. Let's just double check. Not quite. We got to 1999.50. We're very close to taking it out. And all I do now is I watch to see the old low was at 1999. So we're going to take, there we just did it. 1998.50. Oh my gosh, massive selling is coming into the S&P. It went from 99.50 all the way to 98.75. Wow. And now it's trading at 2,000. Boy, what a tremendous amount of sell stops were there. Maybe early, maybe there's some more sell stops behind it, but we'll wait and see. There should be some support at the this level right here, 1999. That's the long-term 382. The world's not coming to an end. Britain is going to still be in business over the next few centuries. Well, I don't know about the next few centuries, but at least the next few decades. So we'll watch it. There will be some support at 1989 in the S&P if we do break down below that 1999 level with some gusto, which thus far we have not really done that. The key figure for me today is the 131.49 level in the British pound. That's the one that's important because that's the 1.618 on the monthly. Amen.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have taken out the low of Friday in the S&P by 1.5 points at 1997.50. The old low was 1999. So far, we haven't fallen out of the sky yet, but it's still early. The old adage is, when they say the sky is falling, the sky is falling. Remember to sell sky. Keep in mind, the main number to look at from my perspective today is the British pound. at 131.49. That was the 61.618 expansion on the long-term monthly pattern. That was also the ABCD pattern. I'm saying this to you because of the fact that the news is being inundated with nothing but terrible things that are happening, and they're scaring the living bejeebies out of the poor folks in the United Kingdom. In fact, 3 of my friends have asked to come to live with me here in Tucson, so they're on their way. So we're going to have a house full until this situation is rectified, but they're going to stay in business. And I'm just looking at patterns. That's basically all I'm looking at. So we'll see. The pattern that I like the best is the one we're going to have to test, and that is these Treasury bonds. There's something not right, folks. I can tell you that by looking at these charts. If you look at the German bond, there's something certainly wrong over there. I mean, it can't even rally at all, or at least our Treasury bonds were able to go up and almost make a double top at that 173 and change level. So we'll see. Yeah, I've had several questions about my riding in Tom's yacht. Yes, I will take a ride in Tom's yacht the next time I get down to the Clearwater area. And but that's going to be probably a little bit later in this century, maybe towards maybe 2080, something like that. If I'm still around, I'll get down there and take a ride in that puppy. I just don't care for boats. All right, let's go on to the next market. We've only got a few minutes here. Pay close attention here because we do have a big ABCD in the S&P down at 1950. I would be a buyer there. I had bought some earlier this morning. We rallied up to 2012. I raised my stop to break even, waiting to re-enter, which will be maybe yes, maybe no.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.